taking us through all of those details and setting up, for our next discussion. To take this forward, we have Lakshmi Iyer, CIO of Debt and Head of Product at Kotak Mahindra AMC, as well as Jayesh Mehta, MD and Country Treasurer at Bank of America. Lakshmi as well as Jayesh, thanks a lot for joining us. This is Pavitra. So, you just heard that entire setup that Prashant put forward. We've already seen foreign investors started buying these categories. How much do you see the inflow going up? And like Prashant was pointing out, it's currently around 1.6% of, the total market. Foreign investors are currently only 1.6%. How much do you think this could move up to? Lakshmi, let me come to you first on this, if you could take that one.
So, Pavitra, hi, morning. So clearly the impending announcement is something which market participants have been waiting with bated breath. In fact, traces of this, talk actually started sometime last month, which is why if you see the net FPI or the foreign portfolio flows for the month of August for fixed income, it closed in at a positive about 1,700 crores. Amount-wise, not significant, but clearly a small sentiment booster. So far, up until September, month to date, the number continues to be a net negative, but a very marginal number of about 500, 600 odd crores. So definitely the markets, if at all this announcement happens, which is being spoken about by the end of this month, could be a very strong sentiment booster. The key is to see, obviously, is the devil in the details. What percentage of inclusion are we talking about? Are we talking about, completely substituting Russia, which means it could be in the ballpark of about 10%? Are we talking about a shade lower than that? And of course, as you rightly alluded to, what kind of timeline we see in the actual culmination. So euphoria might be there, some bit of it has built up, but sustenance of that euphoria, to my mind, is a bit of a question mark right now till we get more clarity on the details.
Okay, morning, Lakshmi and Jayesh for joining in. This is Rima here. It almost seems now it's a matter of when and not if anymore. With Russia going out, there is space, and all investors want a piece of India's growth story. And India's, its growth story has been pretty intact and resilient over the last one decade. Jayesh, coming to you. Lakshmi said the devil lies in the detail. And more importantly, it all boils down to the kind of percentage that India will get. What is your own estimate? And then also on the timeline.
So on timeline, of course, if the announcement comes by, say, September end or maybe mid-October, whenever it comes, right? The actual inclusion timeline could be maybe 6 months to a year away, but the market definitely will price in if it is announced by October, mid-October or so. So that's one good thing people are waiting for. Of course, market not reacting too heavily right now because, last 3, 4, 5 years, we have been always waiting for it, but this time it looks a little bit more real. Mainly because of investor demanding it. So if you really look at it, what the index guys wanted, nothing has changed from that particular side of it, except for the accessible route, which has been made unlimited. So that's good. And as far as settlement is concerned, we have great settlement systems in India, so that will have to get accepted by the index guys. So that's going to be a cliffhanger, whatever the decision comes in. But definitely there is huge investor push to get India into inclusion for a simple reason. Like if you like that market, you want to invest, as long as you make money, you're fine. But the moment you lose money and it's not part of index, people are going to question you. So that's where the challenge is. Now, in terms of estimation, we don't really know if it gets included or not. Secondly, the ballpark number, most of the analysts have come back is around 8 to 10%. So that's the number we are looking at. Even 8% is a good big number to start with. So irrespective of whatever the timeline is, 6 months, 1 year, the market will react as soon as the announcement comes in. So that's where people are, keeping their wait and watch situation. Also, apart from J.P.Morgan, we will also have Bloomberg Barclays meetings somewhere in mid to end October. So both the things, the whole of September, October will be wait and watch kind of situation.
All right, we're waiting by for all of those details, of course. But Jayesh, a key risk that we have been discussing is the fact that this, inclusion into the global markets could sort of make India's debt market more vulnerable, right? Any kind of big global event that we have been seeing so many of, whether it's a Fed rate hike, could sort of expose our markets to more vulnerability. And as foreign investors might want to withdraw money at that time, how much of a risk do you think this is to the debt markets overall?
So firstly, we are, as of right now, as Prashant's chart said, right, we are almost funding 98% locally, domestically. So to that extent, we have a very strong and vibrant domestic market, number one. Number two, when you're part of index, right, so people, when they have negative view, it's just a question of, overweight, underweight, but you don't really move out, assuming, I'm just saying, hypothetically, assuming it's 8% or weightage, So when people have negative view, maybe they may go down to 5-6%, not more than that, unless you had a situation what we saw in equities from October 21 till July 21, which was one-way kind of situation. And naturally, when that kind of situation comes in, you have the central bank who will have a lot of ammunition, because if once the FPI index inclusion happens, the need for central bank to buy government securities will reduce dramatically, looking at the demand supply which we have in India.
Lakshmi, Jayesh mentioned that one of the cliffhangers could be the global indices accepting India's settlement as well as clearance. Are there any issues, other issues, challenges which stand in the way?
So, these were the two key things. One is the settlement, which is the euro clearability, which seemingly, because there is a massive investor push right now, from what we read and understand, that seems to have taken the back burner. And the second was the taxability issue. I think both of these, for now, does not seem to be a roadblock, given the fact that, there are 2 or 3 sets of foreign investors who usually own a particular geography. We are right now probably looking at more of the index others, as we call them, the passive investors, who, the moment they see inclusion of a particular geography or a particular category into the index, tend to just own the index in that particular proportion. So that could well be a starting stone or stepping stone towards probably much more broad-basing requirements as and when needed. But seems to me that, the story that we all saw or read in school days, the boy who cried wolf, and this boy has been crying wolf for, as Jayesh rightly pointed out, for the past 3 to 4 years. The timing seems to be right now.
Just one more question. We spoke about the risks, the vulnerability that it exposes India. But can you talk about, once it gets included, once the announcement comes through, what will be the beneficial impact, whether it's on India's external balance, the current account deficit, the impact on yields? Because now, as Jayesh pointed out, the RBI will need to buy less of government securities. How much do you think the immediate impact could be once the announcement comes through?
So, the moment the announcement comes in, it's not that the passive investors or the other FPIs are going to, make a beeline and start making the investment. So initially, that round of fueling of the rally in bond prices or, lowering of the bond yields could be triggered by the domestic investors, as we rightly observed as a maybe euphoric reaction, because markets are kind of piling on hopes and then giving up hope. So that's the kind of cycle which is going on right now. Subsequently, as the announcement gives way to the tangibility of the timelines of inclusion, we estimate, ballpark, depending on its 8-10%, would be anywhere in the region of $25 to $30 billion, which means, given the second half borrowing calendar, if we broadly see, we are talking about 30,000 odd crores of weekly supply, which means the next 2 to 3 months or 2.5 months of supply could actually get absorbed, which means the Reserve Bank of India, if at all they were to probably come in the market to buy bonds, that need would stand reduced to that extent. So that's the kind of quantum and magnitude and the potential impact this announcement can actually have, maybe with a lag of the next 2 quarters.
All right, got that. Jayesh, just one final question to you. You know, this is something Prashant was also mentioning earlier, the impact that it could have on the rupee. What do you see as, you know, the key impact? Yes, we could see some appreciation pressure, but you tell us what is perhaps likely to be an immediate impact of this kind of a move.
So once the announcement comes, even if the real money guys who follow index may take 6 months to 8 months to come in, there will be a lot of trading FPI accounts who would be also participating in it. So from that perspective, you will start seeing the flow immediately. And you see, FPI flows impact the short-term, rates dramatically, because that's the chunky money which comes in or goes out. Either way, whether it's equity or whether it's fixed income. But if you see sustainable flow coming in, and if the announcement comes, you might see sustainable flow coming in for a longer period, and that definitely will put appreciation pressure on rupee. But we have to see how much RBI lets it appreciate. So that's the question we'll have to see. But yeah, definitely looks like, it can go to 78 quarter. And then that's the time we would see RBI rebuilding the reserves again. But that completely depends on RBI.
Jayesh, Lakshmi, thank you very much for joining us and setting us up for if and when the announcement comes through. We've been waiting it for the last couple of years. Let's see if it comes in September as well as October.